Hi everyone, welcome back to Be Rich. I hope you're doing well on this Sunday evening. I'm still recording from the content team's room because Anand is using the studio like I said in the previous video. Today I wanted to talk about a Japanese stock, a Japanese huge conglomerate. That conglomerate is Mitsubishi because you have seen it already in the title card. So I really can't sneak up a build-up, can I? So it's an old company. My first interaction with this company, of course, which was through the Mitsubishi Lancer. And I'm sure a lot of you remember that car from your childhood. I mean, if you're in my generation, you would definitely remember it. They're into heavy machinery, they're into refrigerations, ACs, they're into a lot of things. And the reason why I'm looking at Mitsubishi is they are a huge company. And right now, looking at their fundamentals, I think they're a company which should definitely be in our radar. And I want to lay out my rationale behind why we should be looking at this company now. In terms of Japanese companies and corporate revolution, I feel they've been sitting there for decades, right? Being in deep discounts for a very long time, like we have spoken about it in this channel before. And what has changed recently is the Tokyo Stock Exchange itself is forcing these old firms with a lot of cash on their balance sheet, saying it is time to show improvement in returns. And why are they keen to show improvement in returns? They want to attract more investors to the Tokyo companies and the Tokyo Stock Exchange. So Mitsubishi has been leading this charge, and they've been doing share buybacks, record buybacks they've been doing. They've improved their return on equity, not return. Return on equity also improved. Mitsubishi has now reached double digits and is turning into a more shareholder focused company is what I would say. And of course, Warren Buffett effect still matters. I know we have been talking about him retiring, handing over, and he's not going to be in the public view so much. But if you look at it, his strategy makes a lot of sense. Nearly 9% stakehold in this company, and he's just not chasing a quick trade. Warren Buffett never does that. Berkshire Hathaway never does this. Aligns along the same lines as something like a Berkshire Hathaway. If you look at it structurally, it's a great company along the same lines as Warren's company. It's a trading powerhouse, and it's just not a global investment machine, and they're just not a commodity trader. And if you look at it, I would say it is a great company to be inside, looking at the way we are moving towards the pivot towards energy and digital transformation. This is a company which you should be definitely looking into. And while inflation, war, supply chain shocks do tend to shake up markets, this actually benefits a company like Mitsubishi because its assets in LNG, copper, coke, coal, right, are the very things the world is right now scrambling for, and especially when inflation runs hot. So it's a natural hedge against global instability if you look at it. The other point being the green pivot, which is also happening. A lot of companies, especially in Asia, seem to be finding funding for green energy transition because of what's happening globally. So if you're looking at it in terms of the green pivot, there's a lot of funding which is coming in for this, and Mitsubishi is just not talking about sustainability. They're spending billions of yen on hydrogen, ammonia, and offshore wind, copper mines, which are all critical for electrification. It's just not that we can exit fossil fuel overnight. We need to create these streams of energy, supply for us to slowly transition out of fossil fuels. And I feel Mitsubishi is doing the right things in this too. So it's moving away from the old, moving towards the new, and that's where the future revenue streams are for us as humanity. While valuation offers a margin of safety, okay, if you look at it where the stock is trading right now at PE ratio, I think it is a fabulous PE ratio compared to global peers. Only question is, where does the yen go? Because if the yen weakens, it is going to offer more bonus to the tailwind. If the yen strengthens, it's going to offer more pain. But that will also be in the short term, because all this pain which we're seeing will be in the short term for a year or two, when we're looking at holding on to the stock for 5 years, 10. So that way, if you look at it, I think you should not worry about the yen too much. yes, if the interest rates go back, the carry trade, all that does have an implication on the US dollar and macroeconomically global. But these are all short-term pains and they're all cyclical. If you look at this company in the long term, I think Mitsubishi is a great company. So this is not a speculative trade. I believe this is a core compounder, and I do believe Mitsubishi is on the road to becoming Japan's version of Berkshire Hathaway. Diversified, disciplined, shareholder friendly, right? And with governance reform and long term opportunities, I think this is a moment that we should definitely put Mitsubishi on your radar and we should look at dipping into the stock when you get an opportunity. So let me know what you think. Is Mitsubishi something already there on your portfolio, or is it new? Did I mention this and you really now I whet your appetite and you're looking at it? So let me know in your comments, and I will come back and offer you more insights as the week progresses into another bunch of companies which I'm looking at and trying to create our own version of the US Patas list. So maybe that will be something we can focus on in the coming year 2026. That as we focus on like an Indian list, that we should also have a US list or a Japanese list that we can also discuss about and keep a track of. Anyway, let me know about all that, and see you tomorrow with another one. Thank you.